Welcome to the Alternative Investor. I'm Nastasia Arendse. Cattle has long been considered a measure of wealth across the continent, but it's not just farmers who are playing in that space, and in today's feature you'll soon understand why. Livestock contributes around 51% to the agricultural economy in South Africa, but global sheep and beef prices rose after the droughts. So I spoke to Paul Makube, who's a senior agricultural economist at FNB, about the state of South Africa's livestock sector. Earlier this year, high maize prices and a downward spiral of beef prices put pressure on cattle farmers. The situation was worsened by a debilitating drought, a stagnant economy, and the foot and mouth disease that broke out in Limpopo in January.
In terms of the livestock performance over the last few months, January we came back from the holidays with news of an outbreak of foot and mouth disease, which has affected the livestock sector, affected export, affected the pork, the beef and sheep farming. But then we were also hit by the COVID-19, which resulted in a depression in prices as the demand, weakened, as with the restaurants, with hotels, and so on closing down. But we have seen a slight recovery in the market following the easing of the lockdown conditions since the first week of June. So we've seen some stabilization in prices across the livestock sector.
While seasonal demand pressures continue to manifest, there is renewed hope for some improved level of consumption.
In terms of the livestock market, we expect a further improvement as warmer months return, and also full activity gets back on track as we slowly get back into the normal economic activity, and all the sectors of the economy start reopening. Then we should see a rebound in that situation, and also prices remain relatively sustainable for the medium to longer term. But we don't expect massive price increases.
What the current coronavirus crisis and the 2008 credit crisis has taught us is that investments need to be diversified. Although diversification is not a guarantee that your funds will not lose value, it just means that they'll lose less value than an investment in a single asset class. Investors have shown interest in non-financial assets such as cattle to provide further diversification. For more, we're joined by Kagiso Tlaubatla, who is the co-founder of SV Capital, which is a company that provides South African investors an opportunity to invest in cattle. Kagiso, thank you so much for your time this afternoon.
Thank you for having me on the show.
So let's talk about the fund. How does it all work that I could own a fraction of a cattle?
Yeah, so what we've done is we've put together an investment product that gives people the ability to invest in cattle. How it works is that you contribute along with other people, and we take those funds and we provide those, or we give the funds to our partner farmers in order for them to purchase the cattle and to maintain it on your behalf. So you can basically become a farmer without having to deal with the admin behind it, because we've partnered with specialist farmers, guys that have been in the industry for a very long time, and that know what they're doing and know the market conditions.
Let's talk about the performance of the fund since inception. How have investors and the market reacted to it?
It's been really good. So the performance of the fund since inception, we started in September of 2017, and we've managed to deliver an average return of 15.4% since inception, which is a very competitive return compared to other asset classes or other similar type of risk profile investments. But what we've seen is that the biggest uptake of our investment has been from individuals as well as stockholders initially. But that has changed quite a bit over the past couple of months because the more sophisticated investor, I think, has seen that investing in cattle, specifically beef cattle, being a defensive type of investment, is a good option for them to have in their portfolio.
All right, so let's talk about the minimum requirements for one to invest in a particular portfolio like this.
So we've got a few options. The minimum requirement is 500 Rand for the monthly option to invest, and for a lump sum is 2,000 Rand. So we wanted to make this investment accessible to the ordinary South African, so you don't require a lot of money to start. And the beauty about it is, obviously, I'm sure your viewers know that a cow is not 500 Rand, nor is it 2,000 Rand. But you essentially investing towards purchasing cattle, so you own a fraction of a cow as opposed to the whole cow by yourself, which benefits from a risk perspective because you share the risk with other people as well.
Let's expand on those risks a little bit. I mean, what are some of the things that investors should keep in mind when one wants to invest in something like this?
So the biggest risk, which the gentleman that was speaking a little bit earlier alluded to, is the pricing risk. So we aren't able to control what the price is in the market, and we can only know the price of the cattle when we sell it. So while we're raising it and we're feeding it, we are not sure exactly what the price is going to be when we sell. That's one of the biggest risks. The other risks that are there, for example, the gentleman mentioned foot and mouth disease or any diseases that really impact. We have, like I mentioned, farmers that are extremely experienced in farming cattle, farming livestock, and that have gone through a lot of these kind of situations before. So the way the farms are structured and the way they're positioned is to optimize production, but also to make sure that if there is any disease outbreaks detected, that they are dealt with. We have a guarantee with our farmers. Our farmers guarantee 99% of our cattle. So what that means is that in a herd of 100, only we allow for one cattle dying in a herd of 100. And should any deaths surpass the one, then we have a guarantee with the farmer, and they essentially replace that cattle.
Right. Just briefly, let's talk about your relationship with the farmers. How do you establish that?
So our farmers go through quite an extensive due diligence process. As you can imagine, we have to pick the right farmers in order for us to be able to deliver the right returns to our clients, but also for us to really to be able to sleep at night. So we partner with commercial farmers. One of our partners at the moment is a company called Beef Corp. They're based in Bronkhorstspruit, and they've got over 80 years of farming experience. So some of your viewers probably might have eaten some of the meat that comes from that farm.
Yeah.
So we do partner with farmers that have been in the game, in the farming industry for a very long time.
All right, Kagiso, let's leave it there. Thank you so much for your time. That is Kagiso Tlaubatla, who is the co-founder of SV Capital. Well, more news with my colleague Nzinga Gunta in just a moment. It's a goodbye from me.